What if I told you that crypto can actually predict what could happen inside the stock market? What if I told you there was a process and a methodology that you could apply to predict where price could fall dramatically, where it could rise dramatically, and where it could turn around, both to the downside and to the upside? Also, if you watch this video all the way through to the end, I'm going to give out some game-changing secrets. Let's run the numbers. Just before we get into the video, I would like to thank everybody who is applying for the Joe D. CTKS Partial Masterclass Scholarship. Your name could be here. I'll award it early next week. If you're interested in getting inside the masterclass, please reach out to me at ctksmethod@gmail.com, or you can directly message me on Twitter/X. Details are in the description of this video. Hi everyone, I'm Ken from Crypto Trading KS and the CTKS Method. If you're new, a very warm welcome, and welcome back CTKS family. Very grateful to share this time together. We're going to go through some incredible insights into the market. They're going to help you tremendously. At times like this, it's really important to move from fear into confidence. And you're not going to find confidence in the mainstream media press. What you're going to find is horrific horror shows. After all, if it wasn't that way, you would simply not read the article. A quick note for those people not in the US, the Labor Day long weekend is coming up on Monday, US time. This means that the markets will be closed then. Heading into the Labor Day weekend, we're currently observing a bit of a retracement in Bitcoin, and we've always got to bear in mind that the major market indices are a risk-on or risk-off indicator. And when Bitcoin goes down, it goes down because it's very risk-sensitive, and it comes up because it's very risk-sensitive as well. When the Russell 2000, the Dow, and also the Nasdaq and S&P 500 improve, we expect to see Bitcoin, which is this blue line, improving. That's exactly what it's doing now. Just bear in mind, across the weekend, there's generally low trading volumes in the crypto market. If you've been watching YouTube, influencers, or reading the mainstream media press, you're probably utterly terrified as to what the markets are doing. We can see that the markets, in particular the Nasdaq indice or the Nasdaq Composite Index, it came down really fast here and really fast here. How could we see into the future to know that when the Nasdaq was around here, it could do something like this? I'm going to show you the most powerful smart money buy and sell level detection system in existence, this indicator, which is effectively just the application of level 1 and level 2 standard certification. You can see at this level, we had a structural failure just at this statistically significant 17,740 level. It's just a little bit below that, but you get the idea. What was this? This is a negative fair value gap. What does that mean? Price can move down very, very quickly, but it can also move up very, very quickly. And look, it just did it again. Now, does this mean? Well, what does this mean? When it moved down very quickly the first time, it had structural levels of support below it. You can see that it came through the first structural support level, the second major structural support level, and bottomed out on the third level. Notice this particular action occurring here. This is called a structural failure just at that very point there. That is another structural failure. When you can't get above structure and confirm a series of higher highs, you've got structural failures. What happened here? Another structural failure, which meant the probability was that we were coming down to that 7438 level. And that's exactly where we went. Now, what do positive fair value gaps do? They can see price appreciating very, very quickly into structural resistance levels. That is a structural failure just below that 17,740 level. What did it do? Just exactly what it did before. But because we have the structure in real time, we know what's going on, and we don't need to worry about the news. When you get a big pull down in price, the news is going to jump up and down, because if it bleeds, it leads. If you would like this structural indicator, it's available at ctksmethod.org. What is really important now is for the Nasdaq to do a structural pass on the 17,560 level and move back up to the 17,740 level. We've seen a structural failure in the last time that it came down. So it's important to see a structural pass here and a series of higher highs being made. If you're liking the video, please smash that like button and don't forget to subscribe. We have one of the best communities on YouTube. I think it's the best. If you're solely in the crypto market, you're probably looking at this and saying, why am I bothering looking at the Nasdaq, the S&P 500, the Dow, the Russell? I don't care about those things. I just want to cuddle my beloved meme coin. Well, guess what? If your beloved meme coin has tanked, it's in all probability because Bitcoin came down. Oh, can you prove a relationship between Bitcoin and my alt? My alt is independent of Bitcoin. Well, let's check that out. The next chart, I'm going to show you the candlestick pattern for Bitcoin, and I'm going to represent the Nasdaq Composite Index as a white line. And we're also going to compare the Nasdaq comp to Bitcoin and Bitcoin, which is the blue line, to the alts. And I just want to show you directional correlation because it's really important. We can see that that big dump inside the stock market was foretold by the oracle that is Bitcoin. But we know what happened inside the Nasdaq comp was that there was a negative fair value gap that just pushed it down, and that's happened again recently. Now, the one thing that I wanted to show you, as Bitcoin comes down, what happens to Ethereum? What happens to Binance Coin? What happens to Solana? What about XRP, Doge, ADA, and the entirety of the crypto market? The entirety of the crypto market is following Bitcoin. Now, what is causing Bitcoin to move around? Well, it's the interdependence between the Tier 1, Tier 2, and Tier 3 charts. Now, what are they? The Tier 1 charts are the engine of financial markets globally. They're really, really important. Tier 2 and Tier 3 charts just confirm what the Tier 1s are doing. You'll need to stack probabilities if you are to be successful inside financial markets. But there's a little bit more to it. When, for example, you look at the Nasdaq, looking at the actual chart is not the point. You need to look at the structure, because the structure determines the price waves, just like you've seen with negative and positive fair value gaps. Therefore, it's really important to look at the structure in Bitcoin. The structural levels for Bitcoin, analyzing the price history, are these specific levels here. Now, let's just pop on the indicator so that you can get a better picture visually of where those smart money buy and sell levels are. Now, we saw a positive fair value gap, or what we call fresh air, positive fresh air above, and that can turn really into negative air or a negative fair value gap very, very quickly. If it has light support, light structural support, or CTKS support, what typically happens is it will overshoot until it finds more and more structure below it. So you can see that its charts are very geologically formed. They have a lot of different support and a lot of different resistance levels. If the resistance levels are tightly clustered together and they're thick, that means that they're really strong. The same goes for structural support levels. If there are a lot of them, that's what we want. And look at this. We can see that we overcame that resistance and rallied up. Where did we rally up to? You got it. The structural resistance level at 59,635. You could have looked at a chart without this structural awareness and never understood how these positive and negative fair value gaps exhibit their price behavior. Also, you're typically looking for structural passes and structural fails as well. If you don't take out the previous high, and you can see that one is lower and that one is lower, that means there's a big problem afoot. But if you do take it out, and that is fantastic, that means that it increases the probability that you're going to move into structural resistance levels above. Please let me know in the comments, do you think we're going up this weekend, or just saying neutral at around that 59,635, or going down? It's really important to have your three-dimensional thinking at all times. And you can see it wasn't just the Nasdaq that had a negative fair value gap on it, it was Bitcoin as well. And it does take time to recover from these gaps. That may be causing Bitcoin's value to be somewhat suppressed in comparison to the major indices futures. Please make sure that you look at total crypto market cap as well as Bitcoin structural levels. You remember when Bitcoin came through its own positive fair value gap and it was rejected? It was actually rejected by total crypto market cap. And you can see down here, total crypto market cap was actually supported by Bitcoin. This is a fascinating thing. You must look at multiple charts together. And where did we peak out? Remember that big push up? We peaked out at that approximate $2.097 trillion structural resistance level. And we did a structural failure just here, which meant that we were moving down. You see how structure always captures price. It is undeniably powerful. When we look at structure, we must always keep in mind and bear in mind the structure of the actual chart that we are trading. For example, if you were trading Ethereum, notice all of this weakness. Could we have predicted this weakness back there? Look forward right at this point and said, if we come down there, if we lose structural support, we are likely to have a negative fair value gap. Could you do that in advance? The answer is yes, you can do it in advance. And we always do it. That's what the CTKS method is for. And you can see when we pop on the structural levels, just above 2582 was the structural level. We saw a rejection of that structural level, a structural fail. Where did Ethereum get caught? It got caught on heavy structural support. Notice that it didn't overshoot like Bitcoin, and it didn't overshoot like total crypto market cap. It's different because this is strong. What happened next? It just flatlined out. When people would see something like this, they would say, oh no, Ethereum's going to 1,000 or below. No, it's just simply going to a structural level. When you're applying the CTKS method, really keep your eyes on failures of structural support, and especially if you've got negative fair value gaps existing in structure. And just remember, structure changes month on month. It's very important to keep this in mind. When you see a structural failure coming up to an area of a negative fair value gap, this can be problematic, and some particular projects will likely overshoot their structural support levels. It's like you need multiple structural support levels to capture and reverse price around. If you keep your eyes on the structural levels, you're going to be ahead of 95% of people. We can see that Solana, just like ETH, just recently has been quite weak. Ethereum has definitely picked up strength, but Solana is currently lagging. Now, what could happen with Solana? Solana is currently 139.77. If we lose the structural support level at 139.10, potentially doing an underside retest, we're going down to the 136.62. But if we manage to keep on putting in higher highs, moving up to around the 141.50 and then above the 142 is on the cards. We may find a period of consolidation because after all, the sellers are on these lines. If you know what the lines mean, you're just way ahead of other people, and you need to be. Just about everybody inside social media is so unequivocally negative. That's because they don't understand where the structural levels are. They place too much importance on news. What is news? If it bleeds, it leads. That's news. And you're about 3 times more sensitive to bad news than good news. So what does that mean? We tend to try to protect ourselves. And that's exactly what the institutions do to you to make you sell. They just make sure that you freak out, and they get all their fellow really good buddies in the media to say, hey, it's time to be horrified. Bail. Why? Because they want what you have. You're here, you're smart money, you're doing different things. You're not just following the retail crowd, you're following structure. And the structure will give you the real-time news story on what's happening inside the charts. When it comes to trading and investing and looking at Ethereum, Ethereum is trading at 25.27. In trading and investing, you can either be knowledgeable or you can be just so fearful. And it does it to you. The markets are horrendous when it comes to triggering fear responses. Of course, something like this big sell-off in ETH down to strong structural support levels would freak the vast majority of people out. Of course, they would be selling into the arms of the loving institutions who say, thank you very much. All you literally need to do is just keep your eye on structure. Total crypto market cap is 2.05 trillion. If we get above that 2.055 trillion, we get a positive fair value gap in the market to 2.81. And there's not that much structural resistance there. We could find ourselves moving up pretty quickly. And if we do that, oh my goodness, all the influencers who have just lapped up the news because they report the news from media sources, no wonder they're scared. They'll be in for a shock. Of course, if it moves down below this 2.043 trillion, there is structural support at 2.011 trillion. And remember, this reflects across the entire crypto market. It's incredibly important to know your structural levels. And if you would like to learn how to draw them up yourself, Level 1 and Level 2 standard certification is available from ctksmethod.org. How do we trade and invest going forward? The first thing is to know your structural levels. If you know what they are, you are ahead of just about everybody else. When people listen to the news, they totally get freaked out. The news is there to freak you out. That's what it does. Let's get our three-dimensional thinking in play. If we get a movement above 59,635, we've got a positive fair value gap. We could move up very quickly to the 60,656 level. If we do not hold 59,635, we could move down to 58,711. But we have so many structural levels here. Look how many clustered ones we have around here. It's just fantastic. If you want to have X-ray vision, and believe me, in the crypto market, you absolutely require it, this methodology will give it to you. And I share it free Monday to Friday. And when you understand these structural levels, you will determine for yourself that they actually figure out where price is going up and down from. They're amazing. And you can get all of the structural levels from all of these charts as a TradingView add-on at ctksmethod.org, which will really help you to just analyze how things are moving. So we've gone through the Nasdaq, we've gone through Bitcoin, we've looked at total crypto market cap, as well as Ethereum and Solana. Boy, oh boy, we've been busy. Please make sure you keep Rule 261 in play. Do your structure before you get swept away with all the negative news that's shared each and every day. That negative news will keep you out of the markets. And counterintuitively, the news will cost you a fortune. Just looking at structure gives you peace of mind because you know where things are going to. If they fail, they fail. But if they cut over, it means it's on. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.